Welcome back to the Double Blonde Brokers podcast. This is part two to the under 65 market and understanding health insurance as we approach open enrollment in the next few weeks. If you missed part one, you can go back to last week's episode where we really broke down what exactly ACA is, the Affordable Care Act, and a lot of definitions of health insurance terms that people don't quite understand all the time. So start back at that episode and then tune into this one as we finish up. Without further ado, here is part two of the under 65 market.
So why would someone say choose a higher deductible versus a low deductible? Well, first of all, there's the economics of it. So usually a higher deductible plan has a lower monthly premium, right? And that's always more desirable for most people to have a lower premium. But the way I look at it, it's this way. I think statistics show that the majority of people don't even reach $1,000 deductible in the course of a year. So you might feel really like nervous about having a five or a six or a $7,000 deductible, right? Because you think, oh my gosh, I'm going to come up with that. Well, for the most part, you're not really ever going to reach that part. So it depends on really what the premiums are. It's really, it boils down to two things: risk tolerance, and it's just a simple math problem. If you can pay a $20 extra a month and totally really lower your deductible, yes, do it. But then on the flip side of that, if you can really lower your premium by a couple $100 a month and then really, and then raise your deductible. So it's just a math thing. What am I going to pay at the end of 12 months in premiums versus with the higher deductible versus the other way, right? Lower deductible, higher premiums. Well, you know what I'm saying. Okay. So you look at it and you add it up at the end, and if you feel like, well, like if I don't get sick, I have literally saved $2,000 this year because I don't have to pay that. It's in premium. But if I do get sick and or I have a surgery and I'm going to have to meet that deductible, you're going to pay it anyway, right? So you have the advantage of possibly saving that money if you have a good, healthy year, but some people are like, I don't care. I just don't even want to even think about having that. Fine. You're just going to be paying more as you go, right?
Yeah.
So that's strictly a call. Now, if someone's going to have a baby, or you're going to have a surgery, or you're going to be meeting that deductible, that's not a question mark. Like you're going to have a baby, right? So you're going to be needing to meet that deductible. That would be a reason why you would want to maybe go ahead and have a lower deductible plan and pay more for the premiums, just for the fact that you satisfy it that much quicker and they're paying towards your benefits that much sooner. So those would be some reasons why you would do that. But if you do have a higher deductible plan, what we also recommend, there's all sorts of different ways to help cover things that maybe aren't always covered by your insurance. So if you have a higher deductible max out of pocket, one of the reasons why we think one of the reasons why people might reach that is through an injury, an accident, or a critical illness. So we're able to put on some, I don't want to call them riders because they're not really riders. They're just like a little supplement plan. And generally they're very inexpensive. But if one of those two things happen, an injury or a critical illness, they're going to pretty much take care of that bill and more, for you in the case of critical illness. Like, for example, you might get a $25,000 critical illness and maybe your deductible and out of pocket is $8,000. Well, the rest of that money is yours because they're going to give you a one-time lump sum payment for that, which many times when you're having that happen, you're going through a time where you're not working and you need the extra help. So these are little things that we can help as brokers add on to plans that people don't really realize that are available, that are, available to people. Like you can have an accident plan that pretty much covers all of your deductible and out of pocket, and maybe you pay $250, for that deductible instead of $5,000 deductible. So those are things we can help you with. The other thing we can do is if you have a particular plan that has higher copays for tier 1, tier 2 drugs, because many of them do, to save on premiums, but you know that you will never spend that kind of money on a tier 1 drug that costs $0 to $4 at a drugstore, right? And they say $20 to $25. You just don't pay that. You would just simply go to your pharmacy and say, hey, what's GoodRx, on that? Because they are designed for you to not really want to turn them into the insurance, to use all these things that are available to people these days, which is a good RX. I think you mentioned Mark Cuban, Amazon. I don't know. They're all out there
Yeah, it's
selling
like
drugs now.
you can get prescriptions. It's kind of weird, but you can get prescriptions almost anywhere these days. And sometimes it pays to, look at different pharmacies, ask for
Yeah,
coupons,
for sure.
ask for samples from your doctor if they want you to try something new and it's expensive. We also talk a lot about helping people find manufacturer coupons for some of the
Right.
really expensive drugs. And sometimes you think like, well, I got to have a lower deductible. I have this expensive drug, but not necessarily. You can get it in ways outside of your insurance that are more affordable. So,
Yeah.
um, and another thing with options on how to help with those deductibles, one of the I kind of think this is a more well-known way of doing it, but a lot of people don't understand this either. So, another way is an HSA plan. That stands for a health savings account. There's other types of plans that are kind of similar to this, but HSA is my personal favorite way to kind of um, help pay for high deductibles, set aside money for that because any money that you put into a health savings account, it never expires. It is yours. You get to take it if you leave. Say you start one on an employer plan, you get to take that money with you when you leave. Say you switch insurance plans the following year, you get to take that money with you until you use it. So it's yours. Um, but basically, what an HSA is, is you can only pair it with a plan that is a high deductible health plan. And a lot of times people say, well, I got a $5,000 deductible. That's a high deductible health plan, right? Maybe. What
Maybe.
really
Yeah.
kind of classifies it as that is it doesn't have any copays at all. No copays for going to the doctor, no copays for drugs. You might think that that is a negative thing, but these plans are really, really great, I think, for kind of two categories of people. One would be younger people who don't really use their insurance a ton. They go to do their wellness preventative care visit once a year, which is still covered 100% on an HSA plan. And other than that, they hardly use it. They're saving that insurance for a rainy day when something bad happens. And so this HSA account, they are able to contribute a certain amount of money. They can decide, I want to put $100 towards it each month, or they can even wait till tax time and dump in, 4 grand if they want to all at once. And the biggest benefit is, well, one, you're setting aside money to help pay for medical expenses, but these are also non-taxed dollars. So the other group of people that it's really great for is people who are self-employed, business owners. They're always looking for a way to save money on taxes. And so this is one of those ways that you can set aside money into an account for yourself, your family, and then also that money is not taxed. So you're able to use it for medical expenses and it saves you money in the long run. You're able to go with a cheaper medical plan, but also still have your back covered when something does happen. Um, these HSA accounts too, it's just like a bank account basically that's set up for you and you get a little debit card and you just get to pay your bills that way. So it's a pretty cool way of doing things. And just to kind of let people know, there are contribution limits on this for this year in 2024. That amount is 4,150 for a single person, and then the contribution amount for a family is 8,300, but that's just 1 year. So if you do this year after year after year, I mean, you could have a bank of, 20, 30 grand after several years that you can use and keep forever.
That's
Super
right.
awesome.
That's right. And you mentioned you can keep it forever. Once you get to Medicare, you think, well, what am I going to, it does kind of end then. But you can use those Medicare funds, HSA funds for your Part B premiums. So it's not like you would ever get to the point where you can't use it. You can, otherwise you could never use it for a premium.
Hmm.
All the time under 65. Never can you use that for premium, only for medical expense. But we're talking glasses and braces and whatever you would want to they don't let us still do any sort of things for our, what am I looking for here? To help improve our looks.
Oh, no, you can't use it for cosmetic reasons,
There
but
we
you
go.
can use it on dental procedures. You can use it to get glasses. You can, I believe you can use it for braces and
I think,
things
yeah,
like that. So,
yeah,
there's a ton of different things. And you say as you turn 65, sometimes people think, well, I don't need this money anymore. I'm on Medicare, but you can pay those premiums with it. And there's always going to be dental expenses. I mean,
right,
let's be honest. Always dental expenses, and there's always prescription expenses. So
right.
you can
So
hold on to that and use it.
for sure. All right. Well, we've kind of given you a basic overview of the open enrollment, ACA type things, and what you will be considering at after November 1st for next year. And the next time we're going to come to you, we're going to let you know about, some other types of insurance that actually aren't ACA or Medicare that many people aren't familiar with. So we'd like to touch on those to help you understand them. They're kind of we're going to save it for the next time to tell you more about it. Just a little teaser on that, but because there's many, many different options out there for people. So until next
Yeah.
time, Emily's going to let you know and how you can get a hold of us, and then we'll see you then.
Yeah, so you can get a hold of us at doubleblondbrokers@gmail.com. You can reach out to us there if you want to schedule an appointment. All these things that we're talking about, it's really, really great to speak with a broker and find out what is best in your situation, what's going to make the most financial sense for you, with deductibles, or if it's an HSA plan or one of these other plans we're going to talk about next week. So feel free to reach out to us via email, and then you can also give us a like, a follow, give us a little comment or thumbs up on our podcast here. We greatly appreciate it. So thanks so much.
Thanks so much. Bye.